I've just gone in for a trade on GBPUSD. It's literally the London session right now, and this is what I'm looking at right now. You see these relative equal highs, roughly about 1.2110. This is where I'm looking to target. This is my initial place for taking profit, and then I'm going to look to take the rest at this imbalance up here. So just to show you that imbalance real quick, so you can see on the 4-hour time frame. There we go. You can see I've got it marked up on the 4-hour time frame over here. So this is what I'm looking at price getting to after taking out these highs over here. So take out these highs, reach into this, and then we can see what price wants to do after that. But the agenda of the trade is to get up here. So now let's just look at the entry. So when price dropped down here, price then traded above. This became our institutional candle, and then I got my entry when price was trading into this imbalance here. It did come all the way down to the institutional candle, and so I could have got a better entry, but it's all good. You know, I was happy to be entering from here, and obviously with TradingView, they put you in where the spreads are. This is why it's a little bit higher. I was trying to get in from literally the lowest point of this imbalance over here. So anyway, guys, we're moving now, and I'm going to go back to the 5-minute time frame to show you how far we are off. So we're not far off, but we're very, very close to this. Literally about 8 pips away. So I'm going to be taking off 50% here and let the rest of the trade ride. I do sound a bit scuffy right now. It is the morning time right now. So yeah, if you can't hear me clearly, then now you know why. We just run out these relative equal highs. I'm going to go ahead and take off half of that position. 5, 4, 3, 2, 3, 5. It's happening really quick. There we go, partial close. Boom. And that's the first one done. That is the first one done. We just take it off 50%, and I want to move my stop loss into just above break even. There we go. And I'm going to let the rest of the trade ride. Alright guys, I'm going to go ahead and take off another half since we have passed this level over here. This is my next area of interest, I believe. Let me just double check. You can see we are trading in that imbalance right now. I'm going to go ahead and take off 80% of this. There we go. So I've just taken off another 8% of this trade. So 1 minute time frame. So you guys can see the rest of this trade. I'm going to just literally throw the stop loss. There's no need for me to have this here no more. So I'm going to go ahead and throw my stop and put it right underneath. I'm going to put my stop loss right underneath this low here. This is the most recent low here before taking out this high. The rest of the position has just been stopped out in profit. My stop loss was just beneath this low here. You can see it got tagged down here, and so the trade is completely done. So this is the power of using institutional candles. If you want to check out that series, the link will be in the cards right now. Now I'm going to go ahead and show you guys my executions. So settings and my executions. There we go. You can see it's a new day. You can see my executions are on the chart right now. This is why I entered. I took some off here. I took some more off when we got into the imbalance, and then the rest of my position got stopped out right beneath this low here in profit. So right now I'm trading gold right now. You can see literally I am looking to take price up to the upside. The reason being, first, we have traded into this daily imbalance over here. And so really truly, I'm just going for something small, nothing huge. So I'm running off this liquidity and then letting the runner ride to roughly about 50% of this imbalance over here. This imbalance is on the 4-hour time frame. This is what I'm looking for price to get to. And so just to show you guys just the amount, the pip amount, before I show you guys my entry, right here is roughly about 187 pips. And then to get down to this high, which is my initial target, which is just here, I want 55 pips. Cool. Now let's look at the entry now. So let's go to the 5-minute time frame for the entry, or let's go to the 2-minute. You might see it a bit better. So what do you see? So you see this push down lower runs out relative equal lows. It basically just runs out liquidity. We run out the liquidity beneath this low, and then we start pushing up higher. And now, so when price traded through this high over here, this candlestick's high, this became an institutional candle. So let's go ahead and mark that up too, so you guys can see it. And the reason I'm marking it all up is because some people say, oh, can you mark up your chart so they can see things a lot clearer? So this is my institutional candle. As you guys know, I like to either enter. So I'm thereabouts the very open, the high. You can catch the open, and you can catch roughly about 50% as well. So wherever 50% is, let's just eyeball it. Let's just say it's around here. I did try to catch an entry when price was down here. I did catch an MT4. My entry here was 180.60. So 180.60. So as you guys can see, when it traded down into the high in the open, I did try to catch it, but then on TradingView, it did put me in a little bit higher. So it is what it is. No big deal. This is more so just showing you guys why I'm in the trade, and the reasons, just the reasons I'm in this trade right now. So yeah, anyway, so down here, pushing up higher. We have, so our initial drawn price is going to be these relative equal highs over here. As you guys saw on a higher time frame, let's go back to the 1-hour time frame. You saw these highs here. That's going to be another drawn price. And so this is what we're working with. All right, family, so we are very close to taking TP. We have run the intraday highs over here, so we've taken out this liquidity. But like I said, I am aiming for the liquidity. I'm initially aiming for the liquidity above this high, which is where I'm going to take off roughly about, let's just double check to see how far we are, at double the size. Yeah, I'm going to be taking off 50% here, and then I'm going to let the rest ride to see whether I can fill in more of this imbalance on the 1 hour time frame. And this was all using a very, very simple concept of institutional candles. If you want to know more about institutional candles, go ahead and check out the series I have for you guys. I'm going to link up on the cards right now, and I'm going to link it in the description too. All right, guys, so this is the final update for gold. You can see your boy got stopped out. I did move my stop loss to just above break even, so roughly about this high over here, above my entry, roughly about this high. I got stopped out over here. Just to throw this in there as well, look, I'm not ticked off, you know, that I got stopped out. The price did run this liquidity. I was aiming for even more. Didn't want to hold the trade if it got past this level, my entry, especially how we run liquidity. Because we run liquidity, this was the main reason why I put my stop loss to break even or just above break even. I didn't expect it to come all the way back down here, but now it's done that. I'm not going to get emotional about it. I'm not going to start feeling some kind of way. If I do see another entry, I will go ahead and jump in, but for now I'm good. I'm not going to just jump in just randomly. But anyway, guys, that's me being stopped out, break even. Literally didn't gain anything on this trade right here. It's not all roses all the time. Sometimes you do get stopped out either in a loss or break even.